How's it going, y'all? So today we're going to be talking about life insurance and in particular living benefits. So a lot of times I'll talk to clients and they may say that they've never heard of living benefits before. So it's always fun to go over this and let people know that they are out there. The main reason that you as an agent or broker may want to go over it with them is because a lot of people will think that the only reason that they need life insurance is if they pass away and want to leave money for their loved ones or to cover their funeral costs and things like that. That's not always the case. Now, if you're looking into life insurance yourself, the main reason that you're going to want to ask about the living benefits is because they're going to pay you in advance if something happens to you and you get seriously sick or injured, and let's say you're unable to work. So a lot of times I'll incorporate this in with health insurance plans. And the question I'll normally ask is, so Mr. or Mrs. Smith, if you were to get sick or injured, what do you have in place currently that's going to help you cover and pay your bills? If they say nothing, later on, I may ask, do you have any other type of health insurance, life insurance? If they say no, then a life insurance plan with living benefits will cover two needs. So for the same cost, they'll be able to cover their life insurance needs so that their family doesn't have to struggle in the event something happens to them. And then if they do end up with something like cancer, heart attack, stroke, any of those major things, they'll be able to take those benefits in advance to help cover their costs. So the way the living benefits works is it usually covers three different things. One is going to be terminal illness, which is if you're given 1 to 2 years to live, they'll be able to take those benefits in advance. And basically what's happening is they're taking your death benefit. Let's say you have $100,000 policy, you may be able to take about $90,000 of that and then use it to cover costs. So if you're given 1 to 2 years to live, you can take that money out, use it for whatever you want to. You can give it to your family members. You can use it for treatment. You can travel the world. It's tax free and there's no limits on what you can use it for. Now, let's say that it's a critical illness or injury, so a heart attack, stroke, things like that. You can take that money out as well and use that money to cover costs. You still have to pay your mortgage or rent. You still have to buy groceries. You still have to pay your light bill, still have to pay your phone bill, right? And so you can take that money and pay for that. You can pay for medications because those can get very costly. There's lots of different things that you can use that for. But at the end of the day, you're trying to get as much protection as you can. And that's in case you pass away for your family, but you also want to have protection for yourself while you're living. Finally, if you can't feed yourself, clothe yourself, bathe yourself, use the restroom on your own, transfer, like move yourself from one place to another, things like that, 2 out of the 6 daily activities, you can receive a monthly amount, and that amount is going to be based on how much insurance coverage you currently have. So that's the way that it basically works. The main reason that you're going to want that again, though, is so that if you get sick or injured, you're unable to work, it can create a buffer for you while you apply for disability, because that can take some time, sometimes 2 years, sometimes more. While you're looking for short-term or long-term disability from your job, for instance, usually there's a grace period there of like 30 to 60 days where you wouldn't be receiving any income. And this is going to act as a protective measure against that. And sometimes what can end up happening is it can dramatically change your life. I had a friend of mine. She was young. She had a stroke. She had a couple of policies with living benefits and was able to pull out, I think it was almost $250,000. She survived, but she was able to use that to launch a business. So you can literally use that for anything that you want to use it for. And so if you're looking for a life insurance plan, and it sounds great, it's really cheap, but it doesn't have living benefits, it's not a good plan. Most plans right now have those, and they don't normally cost anything extra for those benefits. All you have to do is be able to qualify for them. So yes, you do have to make sure you don't have anything major in your past. If you've already had cancer, heart attack, stroke, things like that, you may not qualify for that. But if you haven't had any of those things in your past and you're in good health and you just want really good health insurance, make sure that that has living benefits included in it, so that you don't miss out on that and that you do have that option of pulling that money out in advance. Now, if you have any questions, need a policy review to see if your plan has living benefits included in it, or you just want to shop the market, see what's out there and see what may be a good fit for you, for your family, feel free to click on the link below to schedule a time where we can meet. It's free of charge, just a free consultation. We can go over and see if it makes sense for us to work together. Enjoy the rest of your week and have a great rest of your day.